If you look at the business world over time, one pattern becomes very clear. Some companies grow fast, get attention, and then disappear. Others move slower, get less hype, but somehow stay profitable year after year. And the interesting part is this: it's usually not random. There's a pattern behind companies that stay profitable. But it's not the pattern most people expect. Because it's not about being the biggest, it's not about growing the fastest, and it's not even about having the most innovative product. It's about something much quieter, something more consistent, and often something less exciting. The first part of the pattern is discipline. Profitable companies are extremely disciplined with how they operate. They understand their costs deeply. They know where money is being spent, where it's being wasted, and where it's actually creating value. And they don't let that drift. Because small inefficiencies, over time, become big problems. So instead of chasing growth blindly, they manage what they already have very carefully. This doesn't always look impressive from the outside, but internally it creates stability. And stability is what allows profitability to last. The second part of the pattern is control. Companies that stay profitable tend to control key parts of their business. They control pricing, they control their margins, they control how they deliver value. They don't rely too heavily on external factors they can't manage. Because the more dependent you are on things outside your control, the harder it becomes to stay consistent. This is why many profitable companies are selective about how they grow. They don't expand into areas where they lose control. They don't chase opportunities that stretch their operations too thin. Instead, they focus on areas where they can operate efficiently and predictably, and that focus protects their margins. The third part of the pattern is clarity. Profitable companies are very clear about what they do and what they don't do. They don't try to serve everyone. They don't try to offer everything. They understand their core value and they build around it. This clarity simplifies decisions, it reduces unnecessary complexity, and it prevents the business from drifting into areas that don't make sense financially. Because one of the fastest ways to lose profitability is to expand without clear direction. The fourth part is pricing power. Companies that stay profitable don't rely on being the cheapest. In fact, many of them are not. Instead, they focus on being worth their price. They build products, services, and experiences that justify what they charge. Because when you compete only on price, margins get squeezed. And once margins are gone, profitability becomes difficult to maintain. So instead of lowering prices to win customers, these companies focus on increasing value. They invest in quality, reliability, and experience so that customers are willing to pay and continue paying. This creates a much stronger foundation. Another key pattern is customer retention. Profitable companies don't just focus on getting customers, they focus on keeping them. Because acquiring new customers is expensive, but keeping existing ones is far more efficient. So they invest in relationships, they improve experience, they build trust over time, and that trust leads to repeat business, which is one of the most reliable drivers of profitability. Then there's something less obvious. Profitable companies are often patient. They don't chase every trend. They don't react to every market shift immediately. They take time to evaluate decisions. They think about long-term impact, not just short-term gain. This patience protects them from making costly mistakes, because not every opportunity is worth pursuing, and not every trend is worth following. Knowing when to wait and when to act is part of the pattern. There's also a strong focus on efficiency, not just cutting costs, but using resources effectively. Time, money, people, all of it is managed with intention. Because profitability is not just about how much you make, it's about how much you keep. And companies that stay profitable understand this deeply. They optimize processes, they reduce waste, they improve systems over time. And those improvements compound. But perhaps the most important part of the pattern is this: they align growth with profitability. They don't treat growth and profit as separate goals. They make sure that as they grow, they are also strengthening their margins. This is very different from the grow first, profit later approach. Because growing without profitability often creates dependence. Dependence on funding, dependence on constant expansion, dependence on conditions that may not last. But when growth and profitability are aligned, the business becomes self-sustaining. It doesn't need constant external support. It can operate on its own strength, and that's what allows it to last. Now, none of this is particularly flashy. There are no dramatic moves, no sudden breakthroughs, no overnight success stories. It's mostly about consistency, doing the right things over and over again, managing the business carefully, making disciplined decisions, and avoiding unnecessary risk. But that's exactly why it works. Because profitability is not built on excitement. It's built on structure, it's built on clarity, it's built on control. And those things don't change quickly, they build over time. So when you look at companies that stay profitable for years, even decades, you start to see the same pattern. They are disciplined, they are focused, they understand their business deeply, they price based on value, they retain customers, they operate efficiently, and they think long-term. Individually, none of these things seem extraordinary, but together they create something very powerful: consistency. And in business, consistency is what turns short-term success into long-term profitability, because it's not about winning once, it's about staying in the game and staying profitable over and over again. If you look at the business world over time, one pattern becomes very clear.